The ETFs have been approved, which is a great thing. We're starting to see good flows. There's a lot of liquidation from GBTC, which was expected, as people took advantage of the discounts that they bought those shares at. I think the administration is still antagonistic to Bitcoin and crypto. They had to give on the ETF for legal reasons. But I think that the regulatory environment in Washington is still generally anti-crypto. And I think, end of the year, very positive likelihood that, we'll see Bitcoin at or near the all-time highs. And then, it should really move in 2025 once all these ETFs have really started bringing in dollars and you start seeing more and more people adopting Bitcoin.
What has been happening in your world the last 18 months?
If you look at kind of January of 2023, Bitcoin's at around 15,000. I think our stock price was at around $3, and it was doom and gloom in the industry. 2023 was spent by the mining industry kind of rebuilding. You had a lot of bankruptcies. You had the Core Scientific bankruptcy that had just happened, and then you had the follow-on from FTX, etc. So basically, people were ignoring Bitcoin mining, figuring it was kind of a dead industry. I think we had decided that it was time to. There's no better time to grow than when everybody else is kind of stagnant. We had ordered a lot of machines in 2021 that were delivered through 2022, and so we began deploying our capacity pretty heavily. January of 23, we were at about 7 exahash. We exited 2023 at almost 25 exahash of capacity. So we also focused very much on shoring up our balance sheet, paid down debt, ended the year with about $1 billion in cash and Bitcoin and only about $300 million of debt. December produced about 1,800 Bitcoin, which was kind of an industry record, I think. For a miner to produce. So ended the year great. So over the course of the year, you basically had some positive tailwinds in Bitcoin. Bitcoin price moved up about 3x, closed out the year in the mid 40s. All the miner stocks ended the year very well. We were up over 500% for the year. So it's a great year for us. Our industry really is constrained by three things: access to capital, because it's obviously a CapEx intensive industry. We pay hundreds of millions of dollars for sites and for miners. Access to mining rigs, because at the end of the day, there are a limited supply of mining rigs out there. Really only have 3 major producers now. There's a fourth that's entered, and I'll get into that in a minute. But essentially, historically, if you go back to 2020, 2021, we placed a huge order in 2020 for S19J Pros and kind of cornered the market. I think we ordered like 70,000 machines. And kind of cornered the market on those initially. And so access to capital, access to rigs, and the last is access to capacity to plug those miners in. In early 2023, nobody could raise money. It was a gruesome environment from a capital perspective. There were an increasing number of rigs around, and capacity was still rather constrained from all the growth that had happened in 21. And during 22, as the price of Bitcoin dropped, nobody was really increasing capacity. So over the course of 23, we started seeing, opportunities to growth. And so we definitely took advantage of that. We helped co-found a company called Auradine, which is the only US developer of ASICs for Bitcoin mining rigs. One of our board members, together with one of the founding members of a company called Palo Alto Networks, founded a company called Auradine to design really a best-in-class mining rigs. And Auradine was an idea on kind of an envelope, if you would, the back of an envelope in January of 23. And here we are, and they're already on their second generation product, a 3 nanometer ASIC that in simulation shows that it should operate at about 15 joules a terahash, which is kind of industry leading.
Yeah.
You've started seeing miners move internationally. We established a big site in UAE together with the Sovereign Wealth Fund there, 250 megawatts. We've expanded also into Paraguay now, and you'll continue to see miners like ourselves, move offshore more and more. The regulatory environment is looking better. The ETFs have been approved, which is a great thing. We're starting to see good flows. There's a lot of liquidation from GBTC, which was expected, as people took advantage of the discounts that they bought those shares at. And you're seeing great inflows into the other ETFs, which have been really positive. But now you see the regulators are once again coming, Senator Warren and company coming after Bitcoin with this EIA energy survey. By the way, no other industry has ever had to report on its energy use. This is highly targeted at Bitcoin miners. Look at the AI industry. They are going to consume factors of magnitude more energy than Bitcoin miners. Bitcoin miners use less than 1% of the energy generated in the US. AI is going to use considerably more than that. I think the administration is still antagonistic to Bitcoin and crypto. They had to give on the ETF for legal reasons. But I think that the regulatory environment in Washington is still generally anti-crypto. And so it's going to be very interesting because this is actually a very important topic for the election. 1 in 5 Americans owns crypto, of voting Americans, a little over 52 million. This was in one of the papers the other day. And when you think about that, obviously, people don't want to be told that what they're investing in is bad. But the U.S. government's done that before. In the 1930s, the U.S. government forbade Americans from owning gold because Americans were buying gold instead of savings bonds. Not that I'm a conspiracy theorist, but there's precedent.
Fun fact for you, Fred. I think it was the state of Massachusetts forbade citizens of Massachusetts from participating in the Apple IPO, and that did not go too well for them.
I did not know that. Yeah. I did not know that.
Yeah.
Interesting. So, you basically have an environment where, on the one hand, miners have recuperated their public equity values. They're able to raise capital. They're buying lots of rigs. They're expanding. Global hash rate's expanding, but Bitcoin price is staying relatively flat. And this is where, as we get into the halving, things are going to look really. It's going to be very interesting. We think this is going to be a great period of time for growth. Sovereigns outside the U.S. are investing heavily in Bitcoin mining. Their incentive is not the Bitcoin they produce, but the freedom to transact the Bitcoin that they hold. So what do I mean by that? If a sovereign holds Bitcoin as a reserve asset, they're still dependent on an ability to have access to places where they can trade that. And if they're not mining Bitcoin, they may be locked out of having their wallets transact on pools because of OFAC compliance requirements by the US government on large mining pools in the US or other places. And so they have to mine their own Bitcoin to guarantee that they can transact their Bitcoin. And so that's why you're starting to see a lot of sovereigns look at Bitcoin mining simply from a perspective of, I want to own Bitcoin, but I don't want to own Bitcoin if the US government can stop me from selling it or using it. That's the reason why you see central banks are the single largest buyers of gold today. They're buying more gold than any other buyers out there because central banks of non-US central banks don't want to hold dollars because of the risk of the US weaponizing those dollars. And so I think you're going to see more Bitcoin going into balance sheets of sovereigns. You're going to see companies start owning Bitcoin, and how you hold it on your balance sheet, and you can now market to market, opens up Bitcoin as an asset that corporations, not just banks and financial institutions, but corporations can now carry on their balance sheet transparently. And also the availability of the ETF, which really makes owning Bitcoin for corporations, financial institutions, retirement accounts, et cetera, as simple as buying stocks. So I think we're going to see a lot more Bitcoin becoming part of people's savings, retirement allocations, investment allocations, cash reserves, et cetera. And that's only going to bode well for the price of Bitcoin long term.
What do you think about what Saylor's doing?
Michael is a close friend of ours. He really opened up the people's eyes to the fact that Bitcoin was an asset class that corporations should invest in by putting action to his own words and building one of the biggest Bitcoin balance sheets out there. So we're very grateful for him in doing that, because that's obviously created appreciation in the price of Bitcoin, but it's also shown companies how you can leverage your balance sheet to accumulate a large amount of Bitcoin and the positive impact that can have on your market cap. I think the MicroStrategy's market cap prior to, if you net out the Bitcoin, is $1 billion, somewhere over $1 billion. But with all the Bitcoin, it's considerably higher than that. So he clearly paved the way for a lot of us. I think that with the ETFs now, you have to look at from an investment perspective. There are different degrees of beta and risk and volatility. So for the majority of people who just want to accumulate Bitcoin over the years and have it as a store of value, hedge against inflation, and just a place to store value, Bitcoin ETF or owning spot Bitcoin make a good deal of sense. The benefit of how MicroStrategy leverages their balance sheet and can use debt and convertible bonds, et cetera, as a way to collateralize and buy more Bitcoin, that's kind of a hedge fund approach. And so there's a little bit more beta in MicroStrategy than there is in just spot Bitcoin. Then you have the miners, and this is kind of the Warren Buffett analogy, where he never wanted to own gold, he wanted to own gold miners, because the commodity production cost is relatively consistent, but as the price of the commodity goes up, a lot of profit is generated that isn't captured in the change in price of the commodity itself. And so if you look at Bitcoin miners, especially very liquid ones like ourselves, I mean, we trade 30 to 50 million shares a day. Hedge funds and traders love our stock because you can move in and out of it very easily with large amounts of capital. And you get the benefit that when Bitcoin moves 2%, we typically will move 4%. When Bitcoin goes the other way, we go the other way, again, with the increased volatility. So there's more beta, as investors call it there. And so depending on your risk appetite and how you want to trade it, you go for miners, or you go for MicroStrategy, or you go for spot Bitcoin or a spot Bitcoin ETF. So I think there's ample room in the market for all of these. And, MicroStrategy is a great way for certain people to get a little bit of extra juice.
Do you really think that corporates should be buying Bitcoin?
That any company that is worried about debasement of whatever their corporate fiat currency is. Most companies have an internal currency. They, multinationals are either going to operate in dollars or they'll operate in euros, but they'll pick a currency to do all their internal accounting in. If you're worried about currency being debased and there aren't assets that you readily can invest in that will hedge against that debasement, such as gold or some types of real estate or certain commodities, then you have to look at where you're going to put your money, right? I mean, if the expectation is that the inflation is going to remain around 3%, which is highly likely, and the U.S. has to service its deficit of $33+ trillion of debt, then, long term, unless the U.S. develops an appetite for fiscal austerity, which clearly is not the case, then they are going to have to print more money, which means they're going to have to increase the debt load, which means the dollar has to drop in value. And so if you're holding dollar-denominated assets, then you need to make sure those assets will appreciate as the dollar goes down in value. And the politicians love when asset prices go up because people feel wealthier. People invested 2/3 of savings in China were in real estate because apartment prices and real estate prices kept going up all the time. So in the US, if people see the stock market go up and they see real estate prices going up, people feel wealthier. In reality, they're becoming poorer because the dollar that they earn in salary buys less every day. And so I think over time, corporations will view Bitcoin as one of many places to hold cash. They may hold cash in certain bond instruments, which are highly liquid. But I think as Bitcoin volatility matures, which it will over time, I think Bitcoin will definitely become some place that corporations hold a certain percentage of their assets on the balance sheet. I mean, we hold an inordinate amount of our assets in Bitcoin, but that's because we're in the industry. It's kind of like a gold miner holding onto gold.
So Blockworks is a media and information business. We have folks who will pay us.
And I think, end of the year, very positive likelihood that, we'll see Bitcoin at or near the all-time highs. And then, it should really move in 2025 once all these ETFs have really started bringing in dollars and you start seeing more and more people adopting Bitcoin. So I'm very bullish on 2025. I think 2024 is going to be a consolidation year. And